Based on the provided price history and forecast for Bitcoin, a bullish strategy appears to be more appropriate. The recent price action shows a clear upward trend, and the forecast predicts continued growth over the next week. This suggests a potential for significant gains in the short to medium term. Therefore, I recommend a long position in Bitcoin with an entry price around $87,200. This allows for a potential profit capture as the price moves towards the forecast targets. A stop loss should be placed at $86,000 to manage risk and protect against unexpected price drops. The target price can be set at $91,100, which represents a reasonable profit margin based on the forecast and historical price movements. Given the price trends and forecast for Ethereum, a medium-term investment strategy appears to be the most suitable approach. The historical prices demonstrate a clear upward trend, with recent fluctuations settling around the $3,100 to $3,200 range. The forecast suggests continued growth, reaching around $3,200 in the coming week. This indicates a bullish outlook for Ethereum in the medium term. Therefore, a long position is recommended to capitalize on this potential price increase. A suitable entry price would be around $3,150, aligning with the current price and the forecast. The stop loss should be set at $3,050, below the recent support level, to mitigate potential downside risks. The target price could be set at $3,300, targeting a potential upside of approximately 5% within the next few weeks. This strategy balances risk and reward, allowing for potential profits while safeguarding against significant losses. Based on the provided Ripple price data, a medium-term investment strategy appears most suitable. The historical prices demonstrate a clear upward trend, suggesting potential for continued growth. The forecast prices further reinforce this bullish outlook, projecting continued price increases over the next week. While there's no clear support or resistance levels provided, the consistent upward movement indicates a strong buying pressure. Therefore, a long position in Ripple is recommended for a medium-term investment horizon. An ideal entry price would be around 58 cents, aligning with the recent price action and below the forecast high. A stop loss could be placed at 55 cents to mitigate risk in case of a sudden price reversal. The target price should be set at 90 cents, aiming to capitalize on the projected price increase and potential for significant gains. This strategy allows for a balance between risk and reward, taking advantage of the positive price trends while managing potential downsides. Given the provided price information for Solana, a medium-term investment strategy appears most suitable. The historical price data reveals a general upward trend, with Solana consistently moving higher over the past 2 weeks. While the forecast predicts a slight pullback in the near term, it also indicates continued upward momentum in the medium term. The support price of $209.35 provides a strong foundation for potential buying opportunities, while the resistance price of $222.1 suggests there is still room for growth. Therefore, an investment strategy for Solana would involve entering a long position at the support price of $209.35. A stop-loss order should be placed at $207 to minimize potential losses in case of a deeper pullback. The target price for this investment should be set at $220, aiming to capitalize on the anticipated medium-term price increase. This strategy allows for a balance between risk and reward, taking advantage of the upward trend while mitigating potential downside risk. Given the price trends and forecast for Cardano, a medium-term investment strategy appears most suitable. The historical prices show a consistent upward trajectory, with the current price hovering near its forecast and the support level. The resistance is at $0.7754, indicating that there is still room for upward movement in the medium term. Therefore, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. An entry price of $0.6643, slightly above the support price, would be ideal, allowing you to enter the market at a potentially undervalued point. The stop loss should be set at 62 cents, below the recent price lows and the first significant support level, to protect against any unexpected price reversals. The target price should be set at $0.7754, the resistance level, allowing you to take profits when the price reaches its anticipated upper bound. This strategy balances risk and reward, aiming for a moderate gain over a medium-term horizon. Based on the provided historical price data and the forecast for Coin, a medium-term investment strategy appears to be the most suitable approach. The historical prices demonstrate a consistent upward trend, with recent price increases suggesting growing momentum. The forecast further reinforces this positive outlook, projecting continued price appreciation over the next week. This indicates a bullish sentiment in the short to medium term. Considering this, an investment strategy involving a long position in Coin is recommended. The entry price should be around $3.25, slightly below the current price, allowing for a buffer against potential short-term fluctuations. The stop loss should be set at $3.15, a level that provides a reasonable margin of safety while still allowing for potential price appreciation. The target price should be around $3.70, aligning with the higher end of the forecast range and representing a potential profit of approximately $13%. This strategy capitalizes on the anticipated upward momentum of Coin while managing risk through a well-defined stop loss. Given the price trends and forecast for Filecoin, a medium-term investment strategy appears suitable. The historical prices demonstrate a fluctuating but generally upward trend, with the recent price hovering around $4.08. While the forecast suggests a slight dip in the short term, it predicts a gradual increase towards the end of the period. The support price at $4.018 provides a solid foundation for a potential rebound, and the resistance at $4.206 indicates a ceiling for immediate upward movement. Therefore, a long position in Filecoin is recommended for a medium-term investment horizon. An entry price around $4.05 would allow you to buy in at a slightly discounted price before the predicted upward movement. The stop loss should be placed at $4.01, just below the support price, to minimize potential losses. The target price could be set at $4.20, aiming to capture a significant portion of the expected price increase while staying below the resistance level. This strategy balances risk and reward, allowing you to capitalize on the anticipated growth of Filecoin in the medium term. Given the historical price data and the provided forecast for Theta network, a short-term investment strategy appears to be the most suitable. The historical prices show a general upward trend, with recent fluctuations. However, the forecast suggests a slight pullback in the coming week. This presents an opportunity to enter a short position, aiming to profit from a potential price decline. An entry price of $1.35 aligns with the recent price action and the forecast's downward trajectory. A stop loss should be set at $1.41 to protect against unexpected upward price movements. The target price could be set at $1.29, slightly above the support level, allowing for profit-taking before the price potentially rebounds. This strategy capitalizes on the short-term price fluctuations while mitigating risk through a well-defined stop-loss order. Based on the provided price information for Dogwifhat, a bullish investment strategy is recommended. The historical price data shows a generally upward trend, with the current price hovering near its support level. The forecast predicts continued price growth over the next week, suggesting a favorable market sentiment. Therefore, an aggressive short-term investment strategy would involve entering a long position at the entry price of $3. The stop loss should be set at $2.834, the support price, to protect against any unexpected price drops. The target price should be set at $3.90, aligning with the highest forecast price, allowing for potential profit maximization. This strategy capitalizes on the anticipated upward momentum and aims to capture gains before the price potentially reaches its resistance level. Given the price trends and forecast for Stellar, a medium-term investment strategy appears most suitable. The historical prices demonstrate a steady upward climb, and the forecast suggests continued growth over the next week. While the support price sits at $0.1428, the resistance level at $0.1576 indicates that there is room for further price appreciation. Therefore, a long position is recommended to capitalize on this potential. An ideal entry price would be around $0.145, slightly above the support price but below the resistance level. A stop loss could be placed at $0.140, protecting against potential downside movements. The target price should be set at $0.160, aiming to capture a significant portion of the anticipated price increase. This strategy allows for a balanced approach, taking advantage of the bullish trend while mitigating risk through a well-defined stop loss. Based on the provided price information for Starknet, a short-term investment strategy appears most suitable. The historical price data reveals a generally upward trend, with recent fluctuations around the 44-cent support level. The forecast predicts a slight decline in price over the next week, suggesting a potential pullback. Therefore, a short position on Starknet could be advantageous. An entry price around $0.445, slightly above the current price and the support level, allows for a margin of safety. The stop loss should be set at $0.457, the recent high, to limit potential losses if the price unexpectedly surges. The target price could be set at $0.406, aligning with the forecast and providing a realistic profit target. This strategy capitalizes on the anticipated short-term price decline while managing risk effectively. Based on the provided price history and forecast for PENDLE, a medium-term investment strategy appears to be the most suitable approach. The historical price data reveals a general upward trend, with recent fluctuations suggesting consolidation. The forecast indicates a slight downward movement in the coming week, followed by potential stabilization around the $5.20 mark. This suggests a potential buying opportunity at a slightly discounted price. Therefore, a long position is recommended, with an entry price around $5.15, capitalizing on the anticipated consolidation and potential rebound. A stop loss should be set at $4.95 to minimize potential losses if the price drops below the support level. The target price can be set at $5.60, aiming to capture a substantial portion of the potential upside movement towards the resistance level. This medium-term strategy allows for a balance between risk and reward, capitalizing on the positive long-term trend while mitigating potential short-term fluctuations. Based on the provided historical price data and the forecast for render, an investment strategy focusing on a short-term perspective appears most suitable. The historical prices demonstrate a clear upward trend, with the recent price action hovering near the support level of $5.609. The forecast suggests a continued upward trajectory, with prices expected to reach $6.59 within the next week. This indicates a potential for short-term gains. A long position would be advisable in this scenario. An entry price of $5.80, slightly above the current price and the support level, allows for a margin of safety while still capturing potential upside. The stop loss should be set at $5.609, the support level, to minimize potential losses. The target price could be set at $6.50, aiming to capture a significant portion of the forecasted price increase while leaving room for price fluctuations. This strategy capitalizes on the short-term bullish momentum of render, aiming for a quick and profitable trade. Based on the VeChain price information provided, a medium-term investment strategy appears to be the most suitable. The historical price data shows a fluctuating trend with a slight upward bias. Although the forecast suggests a slight decline in the short term, the support price is relatively close to the current price, indicating a potential for a rebound. Entering a long position at the current price near the support level allows you to capitalize on this potential rebound. Setting the stop loss slightly below the support price at $0.0240 provides a safety net, limiting potential losses. The target price can be set at $0.0270, aiming to capture a significant portion of the potential upside movement towards the resistance level. This medium-term approach allows you to ride out short-term fluctuations while benefiting from the overall upward trend. Based on the provided data for Binance Coin, the investment strategy suggests a short-term, bullish approach. The historical price data shows a general upward trend, with the current price hovering near the support level of $606.30. The forecast indicates a slight dip followed by a potential recovery, aligning with the historical trend. This suggests that Binance Coin might be in a consolidation phase before resuming its upward movement. Therefore, an entry price around $615 could be considered, aiming to capitalize on the anticipated price rebound. A stop-loss order placed at $608 would protect against unexpected downside movements. The target price could be set at $625, aligning with the resistance level and allowing for potential profit-taking before the price faces significant resistance. This strategy capitalizes on the short-term bullish momentum while managing risk effectively. Conflux's recent price history shows a volatile period with fluctuations above and below the 15 cents mark. The forecast indicates a downward trend over the next week, suggesting a potential bearish market sentiment. Considering this, a short-term investment strategy focusing on a short position appears suitable. An aggressive strategy could involve entering a short position at the current price of around $0.149, with a stop-loss order placed slightly above the recent high of $0.162 to minimize potential losses. The target price could be set at $0.1346, the support price identified in the analysis, aiming to capitalize on the predicted price decline. This strategy capitalizes on the short-term bearish momentum indicated by the forecast while managing risk through a well-defined stop-loss order. Based on the provided Worldcoin price history and forecast, a short-term investment strategy appears to be the most suitable. The price has shown significant volatility over the past 2 weeks, with a notable upward trend followed by a slight pullback. The forecast suggests a continuation of this upward momentum, albeit at a slightly slower pace. This presents an opportunity for investors seeking quick returns. Given this outlook, a long position is recommended with an entry price around $2.15, aligning with the current price and the projected upward movement. A stop-loss order should be placed at $2.10 to minimize potential losses in case of a sudden price reversal. The target price can be set at $2.25, aiming to capture a reasonable profit within the short time frame. This strategy capitalizes on the anticipated price increase while managing risk effectively. Given the price trends and forecast for Avalanche, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a generally upward trajectory, with recent fluctuations suggesting consolidation. The forecast indicates a slight dip followed by a potential recovery, pointing towards a sideways to slightly bullish trend in the coming weeks. This suggests that Avalanche may not experience a significant, immediate surge, but could gradually climb towards its resistance level of $35.81. Therefore, a long position is recommended for a medium-term investment strategy. An entry price around $31.50 would allow you to buy in at a relatively attractive price point, while the stop-loss should be placed at $31.16, just below the support level, to minimize potential losses. The target price could be set at $35, aiming to capture a substantial portion of the anticipated upward movement. This strategy allows you to capitalize on the potential growth of Avalanche while mitigating risk through a well-defined stop-loss and a realistic target price. Jupiter shows a fluctuating price history with recent price increases. The forecast suggests a slight dip in the coming week, but the overall trend remains positive. The support price sits at $1.0461, offering a safety net for potential price drops. The resistance price of $1.2465 presents a potential ceiling for upward movement. Given this information, a medium-term investment strategy focusing on a long position seems appropriate. An entry price around $1.13 would allow us to capitalize on the current price level while leaving room for potential growth towards the resistance. The stop-loss should be set at $1.06 to limit potential losses if the price drops below the support level. The target price could be set at $1.22, aiming to profit from a moderate price increase before reaching the resistance. This strategy balances risk and reward, allowing for potential gains while mitigating potential losses. Given the price trends and forecast for EOS, a medium-term investment strategy appears most suitable. The historical prices demonstrate a general upward trend, with the recent price hovering around $0.548. The forecast suggests continued upward movement, reaching as high as $0.577 within the next week. This upward momentum, coupled with the support price of $0.5799, indicates a potential for further price appreciation. Therefore, an investment strategy focusing on a long position in EOS for the medium term is recommended. A suitable entry price would be around $0.548, aligning with the current market price. The stop loss should be set at $0.535 to mitigate potential downside risk. The target price could be set at $0.609, the resistance level, aiming to capitalize on the anticipated price increase. This strategy allows for potential profit from the expected price appreciation while managing risk through a well-defined stop loss. Based on the provided price information for TRON, a medium-term investment strategy appears to be the most suitable approach. The historical price data reveals a recent upward trend, with the price experiencing a significant surge from around 16 cents to 19 cents. Although the forecast suggests continued growth, reaching approximately $0.198 in the coming week, the absence of clear support and resistance levels indicates potential volatility. Therefore, an investment strategy with a medium-term perspective allows for capturing potential gains while mitigating the risks associated with short-term fluctuations. A long position is recommended, with an entry price around $0.176. The stop loss should be placed at $0.170 to protect against potential retracements, while the target price could be set at $0.195, aiming to capitalize on the projected upward movement. This strategy balances the potential for profit with risk management, taking advantage of the positive price momentum while acknowledging the inherent volatility of the cryptocurrency market. Based on the provided information for SE, a medium-term investment strategy appears most suitable. The historical price data reveals an upward trend, indicating a positive outlook. However, the forecast suggests a slight consolidation or minor decline in the near future. This suggests that while the overall trend is bullish, there might be a short-term dip before a potential upward surge. Therefore, a long position is recommended for a medium-term investment horizon. The entry price could be around $0.440, slightly above the support price of $0.446, allowing for some room for the price to consolidate before moving upward. The stop loss should be placed at $0.435 to minimize potential losses in case the price dips below the support level. The target price can be set at $0.500, aiming to capture a significant portion of the potential upside movement based on the historical resistance level of $0.513. This strategy allows for capturing the upward momentum of SE while managing risk effectively during a potential short-term correction. Given the price trends and forecast for Shiba Inu, a short-term investment strategy appears to be the most suitable approach. While the historical price data shows some fluctuations, the forecast indicates a potential upward movement in the coming week. The current price is near the support level of $0.0000235, suggesting a potential buying opportunity. However, the resistance level of $0.0000280 indicates that significant upward momentum might be limited. Therefore, a long position is recommended for a short-term investment strategy. An entry price of $0.0000238, aligning with the first forecast price, would be appropriate. A stop-loss order should be placed at $0.0000235, slightly below the support price, to minimize potential losses. The target price should be set at $0.0000251, the second forecast price, allowing for a reasonable profit margin within a short time frame. This strategy capitalizes on the predicted price increase while managing risk effectively. Given the price trends and forecast for Dogecoin, a medium-term investment strategy appears to be the most suitable. The historical prices demonstrate a general upward trajectory, with the recent price action suggesting a potential breakout from the current range. The forecast indicates continued upward momentum, with prices projected to reach $0.383 in the coming weeks. This suggests that Dogecoin could experience a significant price increase in the medium term. Therefore, an investment strategy involving a long position is recommended. The entry price should be set at $0.327, aligning with the initial forecast price. The stop loss should be placed at $0.27697, the support price, to minimize potential losses. The target price should be set at $0.40037, the resistance price, to capitalize on the anticipated price increase. This strategy allows for a balanced approach, capitalizing on the potential upside while mitigating risks. Given the price trends and forecast for Hooked Protocol, a medium-term investment strategy appears most suitable. The historical prices show a fluctuating trend with recent upward movement, but the forecast indicates a slight pullback in the coming week. This suggests a period of consolidation before potential further growth. The support price at $0.3798 provides a safety net for potential price dips, while the resistance at $0.4294 indicates the upper limit for the current upward movement. Therefore, a long position is recommended for a medium-term investment strategy. An entry price around $0.390 would allow you to capitalize on the potential for upward movement towards the resistance level. The stop loss should be set at $0.3798, the support price, to limit potential losses. The target price could be set at $0.415, a conservative target that offers a healthy return while leaving room for further price appreciation. This strategy balances risk and reward, aiming to profit from the potential upside of Hooked Protocol in the medium term. Given the price trends and forecast for Aevo, a cautious investment strategy would focus on a short-term approach. The historical prices show a recent upward trend, but the forecast indicates a slight downward correction in the coming week. The current price is relatively close to the support price of $0.3319, suggesting a potential for consolidation or a minor pullback. Considering these factors, a short position could be considered to capitalize on the anticipated price decline. An entry price of $0.340 could be considered, aligning with the recent price action and providing a buffer above the current resistance. The stop loss should be set at $0.345, slightly above the entry price, to protect against any unexpected upward movement. The target price could be set at $0.325, aiming to capture a portion of the forecasted price decline. This strategy prioritizes risk management and aims to profit from a short-term correction within a broader upward trend. Based on the provided information for Coin, a short-term investment strategy appears to be the most suitable. The 2-week price history demonstrates an upward trend, with the recent price hovering near the support level of $0.00733. The forecast price suggests a continued upward movement, albeit at a slower pace, with a peak around $0.00719 in the coming week. This indicates a potential for short-term profit. Therefore, an aggressive investment strategy would involve taking a long position in Coin. A suitable entry price would be around $0.00733, just above the current support level. The stop loss should be set at $0.00725 to minimize potential losses if the price dips unexpectedly. The target price could be set at $0.00757, aligning with the recent high and the forecast peak, allowing for a reasonable profit margin. This strategy capitalizes on the short-term bullish momentum of Coin while managing risk through a well-defined stop loss. Given the provided price history and forecast for Coin, a medium-term investment strategy appears most suitable. The historical prices demonstrate a general upward trend, albeit with some fluctuations. The forecast suggests continued growth, reaching a peak around $0.0232 in the coming week. This upward trajectory, coupled with a support price of $0.02165, indicates a favorable environment for a long position. Therefore, I recommend entering a long position on Coin with an entry price around $0.0218. This price point allows for a potential entry before the anticipated price surge. To manage risk, a stop-loss order should be placed at $0.0216, just below the support price. The target price for this medium-term investment should be set at $0.0230, capturing a portion of the projected price increase. This strategy aims to capitalize on the positive price momentum of Suncoin while mitigating potential downside risk. Given the upward price trend and positive forecast for Pepe, a long-term investment strategy appears promising. The historical price data demonstrates a consistent upward movement, with the current price nearing the predicted values. The forecast suggests further price increases over the coming weeks. Therefore, a long position is recommended. An ideal entry price would be around $0.000123, aligning with the recent historical high. A stop loss could be placed slightly below the recent low, around $0.000107, to mitigate potential downside risk. The target price should be set at $0.000264, based on the highest forecast value, allowing for substantial profit potential. This strategy capitalizes on the positive price momentum and aims to benefit from the anticipated continued growth of Pepe in the medium to long term. Based on the provided price information for Toncoin, a medium-term investment strategy appears most suitable. The historical price data shows a general upward trend, with recent fluctuations around the $5.30 support level. The forecast predicts continued growth, reaching $5.55 within the next week. This suggests a bullish outlook for Toncoin in the short to medium term. Therefore, a long position is recommended. A conservative entry price could be set at $5.38, slightly above the current price and the recent support level. The stop loss should be placed at $5.26, below the recent support, to minimize potential losses. The target price could be set at $5.50, aligning with the forecast resistance level and allowing for a reasonable profit margin. This strategy allows for capitalizing on the anticipated upward momentum of Toncoin while managing risk effectively. Given the historical price data and the forecast for Bitcoin Cash, a medium-term investment strategy appears to be the most suitable approach. The price has shown a general upward trend over the past 2 weeks, reaching a high of $472. However, the recent forecast suggests a slight correction in the short term, with prices expected to hover around $419 to $428. This indicates a potential buying opportunity for investors seeking medium-term gains. Therefore, I recommend taking a long position on Bitcoin Cash. An ideal entry price would be around $419, aligning with the forecasted low. Setting a stop loss at $415.90, the support price, would help mitigate potential losses. The target price should be set at $472, the recent high, allowing for a potential profit of approximately $12%. This strategy capitalizes on the long-term upward trend of Bitcoin Cash while managing risk through a well-defined stop loss and a realistic target price. Given the price trends and forecast for Chainlink, an investment strategy focusing on a short-term approach seems appropriate. The historical prices show a slight upward trend, but the forecast suggests a consolidation around the current price level. The support price is at $11.62, indicating a potential floor for the price, while the resistance is at $14.88, suggesting an upper limit for the immediate future. Therefore, a long position is recommended with an entry price at $13. This price point is close to the current price and allows for potential upside movement towards the resistance level. A stop loss should be set at $12.50 to limit potential losses if the price drops below the support level. The target price can be set at $14, aiming to capture a significant portion of the potential upward movement. This strategy capitalizes on the short-term bullish momentum while managing risk effectively. Polkadot shows a history of price fluctuations, but generally trends upwards. The forecast predicts a slight increase in price over the next week. Considering the current price, the support level, and the forecast, a long position in Polkadot appears to be a promising strategy. An ideal entry price would be around $4.95, aligning with the forecast and providing a margin of safety above the support price. The stop loss should be set at $4.882, the support level, to minimize potential losses. The target price could be set at $5.701, the resistance level, aiming to capture the full potential upside. This strategy capitalizes on the upward momentum predicted by the forecast while managing risk effectively. Based on the provided price information for Near Protocol, a short-term investment strategy appears to be the most suitable. The historical prices demonstrate a general upward trend, with recent fluctuations indicating potential volatility. However, the forecast prices suggest a slight correction in the near future, peaking around $5.33 before potentially stabilizing. This suggests a window of opportunity to enter a short position and capitalize on a potential price dip. Considering the support price of $4.99 and the resistance price of $5.575, an ideal entry point for a short position would be around $5.35. This price point allows for a reasonable margin of safety above the immediate support level while aligning with the projected price correction. A stop-loss order should be placed at $5.45 to limit potential losses if the price unexpectedly surges. The target price for this short position could be set at $5.10, aiming to capture a potential price decline towards the lower end of the forecast range. This strategy capitalizes on the short-term volatility while managing risk through a well-defined stop-loss order. Based on the provided price data for stacks, a medium-term investment strategy appears most suitable. The historical price data shows a general upward trend, with recent fluctuations. The forecast indicates a slight dip in the coming week, followed by potential stabilization. This suggests a period of consolidation rather than a significant downturn. Considering this outlook, a long position is recommended. An entry price around $1.80 aligns with the current price and the support level. A stop-loss order should be placed below the recent lows, around $1.75, to protect against unexpected drops. The target price could be set at $1.95, aiming to capitalize on the potential for the price to reach the resistance level. This strategy allows for potential profit while managing risk in a market that appears poised for consolidation rather than a sharp decline. Given the price trends and forecast for Aptos, a medium-term investment strategy appears promising. The historical prices show a generally upward trend, with the price recently breaking above the $10 level. Although the forecast suggests a slight pullback in the near term, it still indicates an overall positive outlook with prices expected to remain above $10 in the coming weeks. The support price at $10.87 provides a safety net, while the resistance at $13.70 indicates the potential for further upside. Therefore, a long position is recommended for a medium-term investment strategy. An entry price of $10.50 allows for some room to enter after a potential short-term pullback while still capitalizing on the upward trend. The stop loss should be set at $10.30 to minimize potential losses if the price drops below the immediate support level. The target price could be set at $12.50, aiming to capture a significant portion of the potential upside before reaching the resistance level. This strategy allows for a balance between risk and reward, aiming to profit from the anticipated medium-term growth of Aptos while mitigating potential downside risk. Given the price trends and forecast for Litecoin, a medium-term investment strategy appears most suitable. The historical prices show a consistent upward trajectory, with the current price hovering near the support level of $82.82. The forecast indicates continued upward movement, suggesting Litecoin could reach $86 within the next week. This suggests a bullish outlook in the medium term. Therefore, a long position is advisable to capitalize on the potential for a price increase. An entry price of $83 would allow you to buy in near the support level, while a stop loss at $82 protects against potential pullbacks. The target price should be set at $86, aligning with the forecast and allowing you to take profits before the price reaches the resistance level of $85.44. Based on the provided information about Uniswap, a cautious, but potentially rewarding investment strategy emerges. The historical price data reveals a general upward trend, with recent fluctuations indicating potential volatility. The forecast suggests a slight dip in the coming week, followed by a possible recovery. Considering this, a long position appears favorable, aiming to capitalize on the anticipated rebound. An ideal entry point would be around $8.60, slightly below the current price, allowing for a margin of safety. The stop loss should be set at $8.20, aligning with the support price and mitigating potential losses. The target price could be set at $9.30, targeting the resistance level and maximizing potential gains. This strategy adopts a medium-term perspective, allowing time for the anticipated price recovery to materialize while managing risk through a well-defined stop loss. Based on the provided data for Bittensor, a short-term investment strategy appears to be most suitable. The historical price data shows a general upward trend, with recent fluctuations. However, the forecast price indicates a slight downward correction in the coming week. This suggests a potential opportunity to enter a short position, capitalizing on the anticipated price dip. Considering the support price at $496 and the resistance price at $544.30, a conservative entry price for a short position could be around $520. A stop-loss order should be placed slightly above the current price, around $530, to minimize potential losses if the price unexpectedly rises. The target price could be set at $480, aiming to capture a decent profit from the anticipated downward movement. This strategy leverages the short-term market fluctuations while managing risk through a well-defined stop-loss order. Given the current price trends and forecast for Internet Computer, a short-term investment strategy focused on a long position appears to be the most suitable approach. The historical price data shows a consistent upward trajectory, with the current price hovering near the support level of $8.596. The forecast suggests a gradual increase in price over the next week, reaching an average of around $8.33. This indicates a bullish outlook in the short term, making a long position potentially profitable. Therefore, an investment strategy for Internet Computer could involve entering a long position at the current market price, around $8.69, with a stop loss set at $8.52 to protect against any unexpected price drops. The target price could be set at $9.48, aiming to capitalize on the potential price increase towards the resistance level. This strategy takes advantage of the positive price momentum and forecast for Internet Computer, allowing for potential profit in the short term while mitigating risk through a well-defined stop loss. Artificial Superintelligence Alliance's historical price shows a fluctuating trend with recent dips. While the forecast suggests a slight decline in the coming week, the price remains above the strong support level of $1.234. Considering the potential for a short-term rebound and the current price proximity to the support level, a bullish strategy appears more promising. Therefore, I recommend a long position on Artificial Superintelligence Alliance. A suitable entry price would be around $1.26, aligning with the support level and the forecast. To manage risk, set a stop loss at $1.23, below the support level. The target price should be $1.41, aiming for a price increase towards the recent resistance level. This strategy capitalizes on the potential for a short-term price recovery while mitigating downside risk. Remember that this is just a suggestion, and thorough research and risk assessment are crucial before making any investment decisions. The provided price information for Optimism suggests a potential short-term investment opportunity. The historical price data reveals a fluctuating trend with recent upward momentum, reaching a peak of $1.82. However, the forecast price indicates a downward trend over the next week, suggesting a potential correction. This aligns with the support price of $1.518, which could act as a potential buying opportunity if the price dips. Given this analysis, a short-term investment strategy focusing on a long position with a conservative approach is recommended. The entry price could be around $1.55, slightly above the support price, allowing for some margin of safety. The stop loss should be set at $1.51, close to the support level, to minimize potential losses. The target price could be set at $1.68, aiming to capture a portion of the potential upward movement before the predicted price correction. This strategy allows for potential profit while managing risk by setting a clear stop loss and a reasonable target price. Based on the Ethereum Classic price data, the 2-week price change shows a slight upward trend, but the forecast predicts a period of consolidation around the current price levels. The support price is at $21.89, while the resistance is at $24.33. This suggests a sideways movement in the short term, with limited potential for significant price fluctuations in either direction. Considering this price action and the forecast, a short-term neutral strategy might be most suitable. We could consider a strategy that involves waiting for a clear breakout above the resistance level of $24.33 before entering a long position. This would signal a potential shift in the trend towards an upward trajectory. Conversely, if the price drops below the support level of $21.89, a short position could be considered, capitalizing on the potential for a decline. However, given the relatively tight price range and the forecast indicating stability, it's important to manage risk carefully and avoid aggressive positions. Given the price trends and forecast for Ethereum name service, a short-term investment strategy focused on a long position appears to be the most suitable approach. The historical price data reveals an overall upward trend, with the recent price hovering near its support level. The forecast indicates a slight upward movement in the coming week, suggesting potential for price appreciation. Therefore, a long position would be advisable to capitalize on this anticipated increase. An entry price of $17 aligns with the current price and the forecast, while a stop loss at $16.37 protects against potential downside risk. The target price should be set at $17.98, aiming to capture the potential price surge towards the resistance level. This strategy allows for a relatively short-term investment horizon, taking advantage of the immediate price movements while minimizing potential exposure to larger market fluctuations. Given the 2-week price change and 1-week forecast for Solana name service, a cautious investment strategy is recommended. The historical price data shows a fluctuating trend, with recent price action indicating a potential downtrend. The forecast further reinforces this bearish outlook, predicting a decline in price over the next week. Considering these factors, a short position on Solana name service appears to be the most suitable strategy. An entry price of $0.216 aligns with the current price and the potential for further downward movement. To manage risk, a stop loss should be set at $0.224, slightly above the recent high. The target price could be set at $0.203, aiming to capitalize on the anticipated price decline towards the support level. This strategy adopts a short-term perspective, seeking to profit from the anticipated price correction. Based on the provided data for Aave, a cautious investment strategy with a medium-term perspective appears most suitable. The 2-week price change reveals a fluctuating trend with a slight upward bias, but the 1-week forecast suggests a potential dip in the coming days. The current price sits near the support level of $162.93, indicating a potential buying opportunity. However, the resistance level of $192.56 suggests that significant upward momentum might be limited in the short term. Therefore, a long position is recommended, aiming to capitalize on the potential for a price rebound towards the resistance level. A conservative entry price of $165 could be considered, allowing for some room for price fluctuation before entering the position. A stop-loss order at $160 would protect against significant downside risk, while a target price of $185 aims to capture a substantial portion of the potential upward movement. This strategy balances risk and reward, allowing for potential gains while mitigating potential losses. The provided data for Injective suggests a potential for short-term gains. The recent 2-week price history shows an upward trend, culminating in a peak of $26. The forecast indicates a consolidation period around $23 for the coming week. This suggests a possible pullback after the recent price increase. Considering this, a short-term investment strategy focusing on a short position appears to be the most promising approach. An ideal entry price for this strategy would be around $25.50, allowing for some room for price fluctuation before entering the short position. The stop loss should be set at $26.20 to protect against an unexpected upward surge. The target price could be set at $22.50, aiming to capitalize on the potential price decline predicted by the forecast. This strategy capitalizes on the potential for a short-term correction in the price of Injective after its recent run-up. Based on the provided Polygon price data and forecast, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows a fluctuating trend with an overall upward bias. Although the forecast suggests a slight downward correction in the near term, the support price of $0.3663 indicates a strong base for potential rebound. Therefore, I recommend a long position with an entry price around $0.368, slightly above the support level. This allows for some room for price consolidation before entering a potential uptrend. The stop loss should be set at $0.366, just below the support level, to minimize risk. The target price can be set at 42 cents, aligning with the resistance level and capturing potential upside gains. This strategy allows for a balance between risk and reward, capitalizing on the medium-term bullish potential of Polygon.